Hey, good afternoon, everybody. Welcome to this wealthmanagement.com Fast Chat. I'm David Armstrong, the editor of wealthmanagement.com. And today we're speaking with Mark Premselar, the Senior Managing Director of Capital Markets with Case. Mark, thanks very much for joining us.
David, thanks for having me. It's great to be here again.
So we know that the U.S. structured product market has grown steadily over the past 6 years. How has the business evolved at Case?
The U.S. structured product business has basically, over the past 6 years, has tripled. Which is a pretty good number. And then over the past 3 years, it's doubled. So the U.S. is still very small when you compare it to the rest of the global scale for structured notes, which was about $100 billion in 2022 for the U.S., which is about 15% of the overall issuance market, again, across the globe. So the numbers I kind of gave to you about increasing 3 times in the last 6 years and increasing 2x in the past 3 years, at Case, we've actually experienced even larger growth than that. So over the past 6 years, we've actually 4x'd our business. And over the past 2 years, we've actually tripled it. So been great growth in the entire structured notes market. And obviously, as you can see at Case, we've dwarfed that success and gotten even bigger quicker, which is a great stat for us all to see here.
For sure. There's been a lot happening in the banking industry lately. How are you seeing advisors react to those shifts?
We've seen advisors just show resilience and confidence, right? And I think that's a testament to sort of the way that the U.S. and the global financial system has reacted to the sort of near crisis that we saw, a crisis in some regards. Most of the issuers, if not all the issuers on our platform, are obviously GSIBs, right? So globally strategically important banks. If anything, an observation that I've had is that once, the sort of Credit Suisse situation fared out, and from a structured note holder perspective, they ended up, or they're assumed to end up being absorbed by UBS, again, another GSIB, as we like to call it, this in Switzerland. I think investors this has actually bolstered their confidence in banks and sort of big bulge bracket names. Almost you've seen a flight to quality, and a lot of these large banks now are deemed as quality. And we certainly saw that in the Case business. For example, March and April were our 2 biggest businesses since inception here at Case. So I know that it may not be the case for everybody, but in terms of our clients, our advisors allocating to this product set, we've seen nothing but increases during this sort of banking crisis.
So what are some of the trends then that you're seeing in the industry, specifically around structured notes?
Yeah, it's a great question. And we definitely are seeing trends around both the product usage in terms of where structured notes are going in a client's portfolio. And then, of course, the wrapper, or how an advisor is getting exposure to structured notes. So on the first point, I think what you're seeing is just a general high commitment to the product set of structured notes, right? As we know, as I've talked about, as a lot of us in the industry talk about, structured notes are not an asset class, right? Stocks, bonds, fixed income, alternative investments, those are asset classes, right? Structured notes are an implementation vehicle to fill that asset allocation bucket in a client's portfolio. And I think relative to how they used to be allocated to, by kind of finding one particular note that's compelling, that had a high coupon, or one particular note that had a great upside participation rate or downside protection, advisors kind of use them periodically or on an ad hoc basis. And now you've just seen a general commitment to it for advisors to users across their portfolios, right? So a yield note that we talk about a lot, a callable yield note that has a call feature that can be called automatically or by the issuer, that has some degree of hard or contingent downside protection, many times in this market can sort of give you a coupon potential of low to mid double-digit return. So if you're seeing a coupon that could sort of give you, a 10, 12% coupon in exchange for sort of tail-like risk on equity markets, well, suddenly that could be my alts bucket, right? That could be next to my private credit, that could be next to my real estate, or that could even be in some sort of, go anywhere opportunistic credit bucket. And I think that advisors are now seeing yield notes being one example. Okay, this has a spot in my alternatives portfolio, and it would not be uncommon, as we've seen with some of our largest clients, for structured notes to be 30, 40% of their alts bucket, right? Moving to the other side of structured notes, growth-oriented notes that are much more beta-oriented, sort of track an index or basket of indices, can give you 1.5 plus or minus the same multiple of that of the index uncapped, with some degree, again, the downside of either contingent or hard downside protection. So you're getting a multiple on the upside with a dampening of volatility on the downside. I think, kind of to summarize this all up, you've seen a commitment to the usage of structured notes within the portfolio, And as a result, positions are getting larger, allocations are getting larger, and advisor usage is obviously hitting all-time highs.
You've touched on this a little bit, but I'll ask you again. Have you seen implementation strategies influenced at all in this environment?
Yeah, and I think this is really the next leg to the structured note story in the United States. What you're starting to see now, and there's more to come on this, and hopefully we'll do another one of these great fast chats while I'll be talking about this specifically, is you're now seeing structured notes move into other investment vehicles, right? So the separately managed account, or an SMA, is a vehicle for structured notes to be placed into, right? Because like we always talk about here, for financial advisors, specifically RIAs, right? They're a manager of managers. They're quarterbacks of wealth. They don't really manage individual positions in their client's portfolio, right? So a lot of these callable yield notes, they get called, they mature. That takes management, that takes operational work. When a growth note matures in a reallocation, right? This is time, effort, and energy that a financial advisor actually has to take away from doing their day job, right? To go ahead and manage these positions. So the SMA structure is a great structure that enables advisors to, one, buy structured notes in efficient format, but also outsource that investment management to a third party that does this for a living, right? And so they can now have their, structured note SMA, the same way they have their equity SMA or alt SMA, whatever that strategy is, they can now have structured notes in that same bucket.
Makes a lot of sense. If an advisor isn't familiar with structured notes, how can they learn more?
First and foremost, they can come to Case, casegroup.com. They can learn a lot about. We've got some great pieces that are publicly available on the structures of the various product types and structures of structured investments. Obviously, coming to talk to Case in general, you can get in touch with myself. I've got a great team that works with me. And then also, even within our platform, we've got a great learning platform called Case IQ that you can obviously learn, more independently about structured notes as well as other alternative investments. But I'd say, it is definitely a product set that it's going to be new regardless who you are if you're not using it. I would definitely recommend using all types of mediums as to how you learn about them. But we have them all here at Case, whether it's content to read, interactive learning, or talking with a human, which never really fails. So many options for you.
Fantastic. All right, Mark Premselaar, thanks very much for joining us.
Thank you.